Hi, it's Terry Ryder from Hotspotting. It's pretty clear to everyone by now that the 4-year boom in the Sydney property market is over, and that there is growing evidence of price decline in some of the sub-markets in the Sydney metropolitan area. So the question for those people who want to invest in Sydney still, or need to invest in Sydney, or prefer to invest in Sydney because that's where they live and they like to invest locally, where can you buy real estate with good prospects for future growth, given that now the major recent period of growth is come to an end? And I think the answer in simple terms is to follow the infrastructure trail to buy real estate that lies in the path of progress. I think that's the theme that has to apply for people investing in Sydney for the next few years. Sydney's recent boom was built upon a very strong New South Wales economy, particularly the Sydney economy, good population growth, jobs being created, a growing economy. And a big part of that has been very large spending on infrastructure, particularly transport infrastructure, new motorway links, upgrades to existing ones, new rail links, extensions of existing ones, as well as investment in hospitals and schools and other educational facilities. So I think infrastructure has been very much a key factor in Sydney's boom. It's going to be an ongoing key factor in underpinning existing values. We do expect some price decline as a general statement, but nothing too major. What we normally see at the end of a major boom is some price correction, but not a major decline in property values, and that's what we're expecting this time around. And one of the things that will underpin existing values is our ongoing strength of the local economy and that ongoing huge infrastructure spend, far more being spent in Sydney on infrastructure, particularly transport infrastructure, than anywhere else in capital city Australia. So this is going to be an ongoing process headed by the new Western Sydney Airport at Badgerys Creek, associated infrastructure with that, but also a lot of other infrastructure. A lot of it's targeted out west, southwest, northwest. Those are the areas that we're favouring. We think people should follow that infrastructure trail and look for the uplift that normally comes when new infrastructure is built, when a new rail line is built, when a new motorway is built, and increases the accessibility of an area and the appeal for buyers, and that generally has some uplift in property values as a result. But in particular, the new airport out at Badgerys Creek, so that's the big kicker. We've already seen property values rise, very strong levels of growth in property in locations close to where the new airport site is going. We expect that to continue. It's going to become not just an airport, but a major jobs node, and there's going to be huge commercial, industrial, retail precincts springing up around it, and a lot more residential as well. So that's going to be hitting the growth, our growth forecast for Sydney in the coming years. So it's very much about following the infrastructure trail, buy property that lies in the path of progress to benefit from the future of Sydney, which is very much going to be built on infrastructure spending. That's it for now. Terry Ryder from Hotspotting signing off. I will talk to you again soon.